We're going to continue on with Garvin's construction for 2011. Here are the computations we completed in the last video. Now we're going to use this data and to create some journal entries. The first journal entry we're going to record is that for the expenses we had in the current year. So if we close this down and go to our journal entries, the first journal entry is construction in progress is our debit. And the credit, we're going to just assume for sake of argument, it's going to all go to cash. And that was the $500 that we spent. Okay. This probably would be accounts payable and all sorts of things, but we're going to ignore that, just treat it as cash. Okay. So that's the first journal entry. Now, coming back to this account, the next piece of information we have is we have some billings on this contract in the current year and how much was collected. We don't have that data here, but it is on the information sheet you're given. So let's go ahead and record those two journal entries. We billed some, so we basically have an accounts receivable. And if we look at the data, the accounts receivable was for, I believe, $450. So we billed them $450. And we're going, that's our debit, and our credit is to billings on contract for $450. So we have two new accounts that we have not seen before. We have construction in progress is one account, and billings on contract is the other account. Construction in progress is basically, let me go to this last slide here. Yep. Construction in progress is basically a bucket. And this is all the costs. It's all going to be all the costs plus all the profit from that we're going to recognize. And this is going to be an asset on our balance sheet. So I'm going to put in this cost of construction of $500 because that's how much we spent. So those are some of our costs we've put in. I'm also going to record here my billings on contract because that's how much we have billed for it. So think of this as an asset that we're building up, and the bucket's going to fill up to our contract price, which in this case is the $10,000. Okay, it can go no higher than $10,000, or we're going to fill it up with costs and profit until it gets to that point. The billings on contract is what we have billed to the person that's hired us. So in some respects, if this is the asset, this is how much they've paid on it. So if you think about these two being linked together with a chain, this is how much we haven't billed for, the net between the two, and how much we own as an asset. Okay, so let's close this and go back to our journal entries or our computations here. Let's look at those. Our next one then is going to be our very last journal entry, and I call like this the money entry because this is the journal entry that is the biggest one and the most complicated. And what we're going to look at is right here and right here. And these are the two pieces. The one thing about percentage of completion method is that it does not, if you think about all other transactions, we always have sales and cost of goods sold are the two transactions we have, and then gross profit is a subtotal. In the percentage of completion method, what we're going to have is the sales number or revenues, right? Is our top line. The other journal entry is to the actual gross profit number. So in the percentage of completion method, this number then is the subtotal. The cost of goods sold number becomes the subtotal, and we subtotal back to that. Okay? And you can see that we've actually calculated here the estimated profit to date, which is right here. And we've actually estimated the revenues to date, which is the number right here. So if we're going to put those then in a journal entry, they would go costs of construction, and I'm going to put that first but in this case it's a plug. Okay. Construction in progress excuse me, erase that. I'm going to spell this right. Construction in progress. And in this case, this was 125 is what we computed. And our revenues number we computed was 625. So in this case, our cost of construction, our plug, was $500. And you can see if we look back at what we did before, we computed this. And it's nice to do this as just a check figure. Okay, so it does tie out. Right, so that is the money entry. There was one thing I forgot to put in here, and that was that when we billed them, they actually paid for part of it. So we got some cash, and they paid their accounts receivable that we had billed our client. Okay, so these are the journal entries for Garvin's construction for 2011. The next journal. Let me do one more thing here. Oops. Let me close that. And so we need to put something else in our construction in progress account. And that is the profit for the year. Okay. So if we look at our costs for the year and our profit for the year, these are both for 2011. We're starting to fill the bucket up. All right. So this is, in the next video, we will do the balance sheet, income statement, and statement of cash flow for 2011 for Garvin's Construction.